Hey guys, Randy again. A few exercises in Chapter 6 I want to do a video for so you can look at it at your leisure, pause it, try them, try it again. Some of the shorter exercises I will do during class time, but these ones that take a little longer, I'd rather have a separate video for them. So the first one I want to do is brief exercise 6.6. It's on page 6.6-64, and this is a warranty question. And warranty is a common concept we look at in the revenue chapter and also in the liability chapter. It's a common transaction for companies. There are choices you can do for accounting, so it's a good exercise to look at how revenue should be recorded and how we match a sale to the related costs. So if you read brief exercise 6-6, we've sold some things, we've provided a 2-year warranty, we've also sold an extended warranty for 2 additional years. When we are accounting for warranties, we have 2 choices as to what method we use. One is what's called an assurance-based approach, or the assurance method. And assurance is really the customer buys a good, and I promise to fix it, and I'm going to record any estimated expenses for fixing it at the time of the sale. That's matching, right? I expect to incur costs in the future related to the sale of the good today. Therefore, I want to record those estimated expenses today so that I match it against the sale. It would not be a good thing to record all my sales revenue today and then record expenses related to it next year and the year after when I have no corresponding revenue next year and the year after. The other approach, which we use for extended warranty and we can use for other warranties as well, is called the service approach. And service is really saying, now the customer is actually buying warranty from us. So in this example, they bought extended warranty for year 3 and year 4. So how do I record these? Well, the assurance approach, I want to record my estimated expense at the time of the purchase, and I'm going to record a corresponding liability. So I use the term payable, and I'd be fine with payable on an exam, but to be consistent with the text, they use the term liability. And then as I incur costs, I'll bring the liability down. The service type, I'm going to actually record the cash that they pay me for the warranty, but at the time of selling it, I'm going to record it to unearned warranty revenue, and I will earn that warranty revenue over time. Sorry, spelling is hard. As I provide the warranty. So following through the question in the textbook, BE6.6, we sold for a price of $1 million. So I'm going to have a debit to cash and a credit to sales revenue. So my normal sales entry, I'm selling a good, so normally when I record the sale, I also want to record the cost of goods sold. Right, matching. If I'm recording the revenue for selling something, I should record the cost of those goods that I'm selling. Normally, if I'm selling goods, I'm bringing it out of inventory. Okay, so my normal entry for selling a good out of inventory. The other thing in this, though, is that I expect to spend an additional $40,000 over the next 2 years providing that warranty. So again, for matching, I want to record that warranty expense at the time of the sale so that I can match it against the sales revenue. And I'm going to set up a liability. Okay, so in theory, I have recorded all of the expenses that I am aware of that relate to the sale of those goods. Those expenses are the cost of the goods and the $40,000 I'm going to have to spend over the next 2 years' warranty. And then this question says, I also sold an extended warranty for years 3 and 4, right, 2 years beyond the 2-year period, and the customer paid me $12,000 for it. So This is a little different order than the textbook solution, but the same numbers work out. And if I've actually sold the customer this service, then this is warranty revenue. But it's going to be warranty revenue in years 3 and years 4. So at this time, it's unearned. So again, I'm accomplishing my matching here because I'm not recording any revenue or any expense now. So I'm just going to take, this is beyond what the question has, but let's say I incur some costs in year 1. What am I going to record? Well, first of all, let's assume that I have to pay cash. I have to pay somebody to fix this thing. $5,000. Right, so customer brings it back, it's broken, I need to fix it, and it cost me $5,000. What am I going to record that to? Well, I'm going to reduce my liability. I thought I was going to incur some costs, so I set up a liability. Now I've actually incurred them. So let's take it out of liability. So following this approach, if I actually incur $40,000 in the next 2 years, nothing's going to hit my income statement. I won't record any more expense because my estimate was perfect. That's highly doubtful, but that's what we're saying we would do. If I incur costs in year 3, though, now it changes. I don't have this warranty for years 1 and 2 anymore. Now it's the extended warranty. And what's going to happen in year 3 and year 4 is I'm going to recognize revenue related to that warranty I sold. Apologize for the spelling. Now there's multiple ways you could record this revenue over time, but let's assume straight line. So in year 3, I'm going to record $6,000 of revenue. And in year 4, I'll do that as well. Okay. And then as I incur costs, I'll actually record the expense. So those same $5,000 of expenses occur again in year 3. Now it's warranty expense. Because now the matching is I want to record the expense related to the warranty revenue I'm recording. And credit the cash or whatever it is I'm paying. Okay, so under the assurance type, I'm just drawing down the liability as I spend money. Under the service type, I'm going to recognize warranty revenue over the period, and any costs I incur, I'll record to expense. And if I charged more for the warranty than what I'm going to incur, I'm going to recognize net revenue. If my estimate isn't good and I spend more than $12,000, I'm going to end up with a net expense. But now it relates to the warranty service I sold. Hope that makes sense. I'm going to cut this off here and do another question shortly. Thanks.